Big news today. For the first time in a year, the Bank of Canada has decided not to raise interest rates. And the question on my mind, on everyone's mind really, is are they done and are rates finally stable? If you have a variable rate mortgage like most Canadians and you're seeing those monthly payments increase, or now you're only paying interest and nothing against the principal, the question of how high rates will go could really be keeping you up at night, and rightfully so. So I've spent a lot of time on Reddit, YouTube, Twitter, trying to find an answer, and it seems one thread, one theory keeps repeating about interest rates, where they may be headed, lies solely with the US Federal Reserve and not the Bank of Canada. In fact, Canada is just along for the ride with our neighbors down south. This is interesting because back in January, the Bank of Canada was using language that implied rates would stabilize or even come down at some point this year, whereas in the US, they're saying to brace yourself, inflation is still red hot, and rates could still go up. So in this video, we're going to look at key differences between US versus Canada mortgages and what it could mean for interest rates this year. First off, just how bad is it? 3/4 of CIBC's variable rate clients have reached their trigger rates, and over half of variable rate mortgage holders are saying all their mortgage payments go towards servicing interest costs only. More Canadians are paying more each month and building no equity. The good news is we aren't seeing mass sell-offs or home foreclosures yet. Instead, we're seeing an increase in amortization periods, a lot more 35-year amortizations. So Canadians have chosen or been forced to choose to kick the can down the road. It's really a band-aid solution, but it's working, and at least it works at today's rates, which are historically still low. But historically, we were buying houses at 3 times annual income, not the 6, 7, or even 8 times annual income that we see today. In the US, you can get a fixed rate mortgage for 15 to 30 years, whereas the longest term we can get here in Canada is only 5 years. This means, for example, Americans who purchased their homes in 2021 when rates were very low could be comfortably locked in at a low rate of under 2% for 30 years. Americans can also deduct interest paid on their principal residence against their income. And it's also easier to obtain a mortgage here in Canada than the States, where they have more stringent requirements and longer wait times to get a mortgage, which has resulted perhaps in people being a little less conservative in Canada, which has resulted in more household debt per capita here. We carry more debt and it rolls over every 5 years, so we're way more exposed to interest rates rising. Unfortunately, the theory is that Canada has to follow suit with interest rate rises in the US. Here's a quick look at interest rates in the last 20 years, and you'll see there's some deviation, but not much between the two countries. If the Bank of Canada doesn't keep in step with the US Federal Reserve, then it could devalue our currency and increase the cost of imported goods from the US and the world, which will further drive inflation and costs up in Canada. Our economy is much more fragile, it's much more susceptible to higher interest rates. This means ultimately America has a much higher threshold for higher rates than Canadians do, so they may keep raising rates even if the Bank of Canada is reluctant to do so. If you're buying a home or your mortgage is coming up for renewal, it sounds like the safest play right now is to get a 2 or 3 year fixed rate. Big disclaimer here, it really depends on your income, your risk tolerance, your long-term plans, so please talk to a professional mortgage lender. But I think it's worth considering the theory that the US Federal Reserve is not done raising rates. I want to hear your thoughts on where you think interest rates will go this year. Please leave a comment below. Maybe you're buying a home or you have a mortgage coming up for renewal. So please let me know in the comments below if you're going with a fixed or a variable rate mortgage and just how you're experiencing this crazy market out there. Thank you for watching, and I'll see you next time.